If you had the option to retire and never work again and you become wealthier and wealthier over time, would you? Working until your mid-60s would be okay if you loved your job and didn't mind trading 40 or so years of your life for money. The sooner you begin earning passive income, the sooner you'll be able to travel, spend time with family, and enjoy free time. The problem with traditional retirement investing is that once you quit working, your annual income no longer increases and you're stuck receiving the same pay forever. You might receive small adjustments for inflation, but the thought of a stagnant income isn't very exciting. Thankfully, using dividends to fund your expenses could allow you to retire early and receive continual raises. This means that if you retire modestly in your 30s or 40s, by the time you reach traditional retirement age, you'll be earning a large income. How can you utilize dividends so that you can retire at a young age and continue to see your investments grow over time? My name is Chris, and I help teach people about money, personal finance, and investing. If you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. Retiring early on dividends takes some sacrifice. You must save a significant amount of money every year and invest it properly. This can be difficult and is certainly not for everyone. If that amount of dedication and hard work that's required to retire early was easy, everyone would do it. The good news is that it is attainable and it doesn't necessarily require a high-paying job that requires years of schooling. In fact, starting a job immediately might be a better choice than earning a college degree over 4 or more years. If you only plan on working until age 35, does the math make sense to spend 4 or 8 years obtaining a degree, or would it be better to begin working and investing immediately? In college, you could potentially be missing out on 4 to 8 additional years of compound interest. Your income might be lower without the degree, but you could begin investing much sooner. Without the additional expense of college, the difference could be non-existent. The numbers can be calculated using figures that closely align with your scenario to give you an idea of the best route to take. How much money will you need to retire on dividends? Dividend investing experts suggest that you could aim to live on a portfolio that yields 4% in annual dividends. This would be an attainable and safe yield that would also allow your income and portfolio size to grow over time. That's quite the opposite of traditional advice, which often requires you to cut back when you retire and keep your expenses down forever. There are many dividend ETFs that would fall into this range that hold profitable companies that are likely to increase their dividends regularly. A 4% yield would provide about $20,000 per year in income on a $500,000 portfolio, and about $40,000 per year on a $1 million portfolio. You would receive regular payments without ever needing to touch the principal of your investment. In fact, the principal will grow over time when invested properly while you receive regular income. Unlike traditional retirement income styles, there's no need to sell a portion of your investments for income. That's why dividend investing can be very desirable. A young retiree can live on a low income at the beginning of retirement and then inflate their lifestyle as they age, and as a more luxurious way of life is more preferable. When you retire early, chances are that you're going to need to live frugally leading up to that date and for some time after. Unless you had a really high-paying job that allowed you to save a lot of money very quickly, you're going to want to cut back wherever possible. Although being frugal might seem tiring, it will pay off when you reach your goals. Besides, some acts of frugality just make sense, such as not eating out multiple times per week and not wasting money on impulse purchases. Are those trade-offs that much of an inconvenience when you consider what they'll help you accomplish? When you're older, you're not going to be upset that you were careful with money, given you didn't miss out on any important life experiences. In fact, you'll be happy that you were frugal. These frugal habits will not only allow you to save more money, they'll also help you live on less money so that you won't require as much dividend income to become financially free. 4% might seem like a very low number, and that you would need an astronomical amount of money to be able to retire on that type of yield. There is some truth to that, but early retirees typically have low expenses because they don't want to be enslaved to a job and they're willing to be more frugal. Many people would argue that they could live on $20,000 per year to start if it meant they would never need to work again. In order to achieve this, you would need about $500,000. That's a sizable chunk of change, but it's more reasonable when you break the numbers down. Someone could invest just $1,000 per month into the S&P 500 for 17 years, or from age 18 to 35, and they would have over $500,000. Besides, when you're retired, there are more opportunities to save money, such as traveling during the off-season. When you're working a regular job, traveling must be done on weekends and holiday weeks when places are busy and prices are expensive. Could you live on less than $1,700 per month? If you're single and your taxable income is less than $40,400, you won't be required to pay any taxes on qualified dividends. Even with a brokerage account, you'll be able to earn tax-free dividends as long as you're in that tax bracket. The largest single expense for most people is housing, but there are ways to reduce that cost temporarily as you reach retirement and until your income rises to a more comfortable level. House hacking is one of the best ways to reduce your housing costs. This could be in the form of sharing an apartment with roommates. If you're able to, you could buy a multi-family home and rent out the other units so that the rent covers your portion of the bills. Another option is to rent out your home on a short-term basis as you travel, visit friends and family, or house sit in other locations. Transportation is the second largest expense for most, which often comes in the form of an expensive finance vehicle. This can be minimized by owning an inexpensive but reliable vehicle, using other forms of transportation like a bike or public transit, or just not owning a car at all. The opportunities are plentiful if you're willing to be creative. Not everyone wants to be extremely frugal in their younger years, and there's nothing wrong with wanting to be more spendy. But if you want to retire very early, more often than not, you'll need to carefully watch your spending and diligently invest in quality assets that will provide income for a long time. Typically, those who want to retire very early, like Mr. Money Mustache, are happy to minimize their spending so that they can reach their goals. The progress made early on in your lifetime will provide exponential returns for your future. This will allow you the freedom to experience new things when many of your peers are stuck working into their 40s, 50s, and 60s. You can always decide to rejoin the workforce in some form if you get tired of retirement and want some more spending money. Those people who didn't prepare early on won't have this option. While most investment withdrawal methods involve combining asset sales with interest income from bonds, it's not always the best way. There's another course of action that will help you reach a 4% yield from your investments. By investing in quality dividend stocks and funds with rising payouts, investors can benefit from compounding and historical inflation-beating distribution growth. This type of sustainable investing with rising future income and net worth is perfect for those who want to retire at a young age. As time goes on, your income will increase, allowing you to live more lavishly if you choose. Learn how to find these excellent investments and develop a course of action that can provide you the freedom to spend your life how you decide.